So if you're into crypto at all, you know the feeling, right? Is it the future of finance or is it just endless chaos? Every single headline seems to contradict the last one. Well, today, we're going to cut through all that noise with a deep dive into where the market is actually headed in 2026.
We're digging into a major new report that asks the one question that's pretty much on everyone's mind. After all these years of insane peaks and stomach-churning drops, is the crypto market finally, actually, entering a new, more mature phase?
And man, what a wild ride it has been. You can see it right here. The total market cap just soaring past $4 trillion in 2025 before, you guessed it, a major pullback. We've all seen this movie before. But the big argument this time is that the recovery and the road ahead are being built on a much stronger foundation.
The core idea here is that you've got these three powerful yet interconnected forces all converging at once. Think of it like a three-legged stool, all coming together to support a more stable and integrated crypto market. We're going to walk through each leg.
All right, first up, the leg that's been, well, kind of missing for years: regulation.
You know, for the longest time, the biggest question mark hanging over crypto wasn't really about the tech. It was about the rules. That lack of clarity made the big institutions really hesitant to jump in. But in 2025, that fog finally started to lift.
And look, this isn't just happening in one place. It's a full-on global trend. In the US, you've got new acts creating a real federal framework. Over in Europe, their comprehensive MiCA regulation is now fully up and running. And across Asia and Latin America, policymakers are finally putting clear guardrails in place. The bottom line here, the whole Wild West era of crypto, it's really starting to come to an end.
Okay, let's talk about the second leg of that stool. The technology itself is evolving, and it's creating these really cool new bridges to traditional finance while unlocking all sorts of new capabilities.
Now, a huge concept here is something called tokenization, or what you'll hear people call RWA for real-world assets. And I know, it sounds super complex, but the idea is actually pretty simple. Just imagine turning a piece of real estate or a government bond into a digital token that you can trade instantly, 24/7.
And listen, this isn't some pie-in-the-sky futuristic idea. By the end of 2025, there was already over $17 billion in real assets tokenized on-chain. And I mean, just look at the biggest slice of that pie, US Treasury bills. That's a huge sign that some of the most traditional, boring in a good way assets are starting to move into this new digital world.
All right, the other massive tech shift we're seeing is this incredible convergence of AI and crypto. Basically, we're talking about creating these smart, autonomous AI agents that can manage and execute super complex financial strategies right on the blockchain, way faster and more efficiently than any human ever could.
And the report really frames this as a long-term thing. It says that this isn't just some passing trend, but a fundamental shift towards more transparent and democratized intelligent systems. That's a pretty bold claim, right?
And finally, on the tech side of things, as our world gets more and more digital, people are demanding more privacy. And you can actually see that reflected on the blockchain. This chart shows this huge spike in shielded or private transactions in 2025. It's clear the market is responding to this very real, very human need for more privacy and control over our data. So, okay, we've got clearer rules, we've got evolving tech, and that just sets the stage perfectly for our third and final leg, the big one, the arrival of institutional money.
For most of its life, right, Bitcoin's price has been driven by its own internal clock, these 4-year halving cycles that you can see mapped out here, where the creation of new Bitcoin gets cut in half. This created a sort of predictable, but also super speculative story that really drove the whole market.
But that old story is getting a major rewrite. The argument is that those internal cycles are just becoming less and less important compared to this massive new wave of demand coming from the outside world.
And here it is, this is the game changer. The introduction of spot Bitcoin ETFs basically opened the floodgates for institutional capital. Just look at that cumulative flow line. We're talking over $58 billion in net inflows. This is a complete structural shift in demand. It absolutely dwarfs what we saw before.
And you know what? It's not just a Bitcoin story. After the ETFs for Bitcoin were so successful, Ethereum's followed suit, pulling in around $12 billion in just their first few months. This really shows that the institutional appetite is expanding, moving out into the wider crypto ecosystem.
So when you put it all together, these three legs, regulation, tech, and institutional cash, it really does feel like the market is standing on much stronger ground. But every system has its risks, and there's one long-term threat that is honestly kind of mind-boggling.
Yeah, it's not regulation, it's not another market crash. The report points to something that sounds like it's straight out of a sci-fi movie, the threat from quantum computers.
So check out this number, 6.5 million. What in the world could that possibly be?
Well, that's the estimated number of Bitcoin, nearly a third of the entire supply that could potentially be vulnerable if someone ever builds a powerful enough quantum computer. See, these are coins sitting in older types of wallets, and their security could, in theory, be cracked.
But here's the thing, and this is a really good sign of a maturing industry. People aren't just ignoring this. The developer community is already hard at work on a transition to what's called post-quantum cryptography. Solutions are being designed and tested right now, years before this threat could ever become a reality. This is real, proactive, long-term planning.
So, let's bring it all home. That three-legged stool we talked about. Clear regulations, incredible new tech like tokenization and AI, and that massive wave of institutional capital, it's creating a market that is just fundamentally different from the one we knew just a few years back.
And that really leaves us with one last, pretty powerful thought. It feels like we've finally moved past the whole debate of if crypto is going to survive. The real question now, as we look towards 2026 and beyond, is how is this more mature, more stable asset class going to reshape the financial world as we know it?